We are about to start the symposium organized by Accounting Europe and the Financial Reporting Standard Committee of the European Accounting Association. And the topic of this symposium is transporting the new European directive and the role of the current status of IFRS and the completion of the completion of the national gap. So we know that although IFRS at a local level could have different types of influence because they are just applied to the consolidated accounts of listed entities, we have a special issue. We call for papers for a special issue in Accounting Europe related with this influence of IFRS on local GAAP. And all of them has been already published online, 25 papers on all the countries. And Paul Andre, the editor of Accounting Europe, is going to present first a brief summary of this call for papers result. And then we have Anne McKeegan from the ISB and Saskia from the IFRAC in order to give us a view of the regulators on this topic of the influence of IFRS on small and medium-sized entities. And after these presentations, we have the view of the practitioners. We have Richard Martin from ACCA and from EAA for small and medium-sized entities. And we have Salvador Marin, also in charge of an institution which is giving finance to small and medium-sized entities. So let's see what they say about this topic, starting with Paul Andre. So Paul, when you want.
Great. Thank you very much, Araceli, and thank you all for being here. I'm sure this morning you had a tough decision between beach conference center, so a certain number of you have decided to cross the street or come by taxi and see us this morning. Whoops.
But it's not, it's not in the... Yeah, yes. No, sorry, the first one.
The first one, yes.
Yeah, but it's not in the... Okay.
Okay. Yes.
This one. But we can see. Okay, 1 second.
Okay. All right, so we'll get things going. So yes, this is our annual, if you want, sort of symposium. For the last 4 or 5 years, we've been doing a symposium and linking this symposium, if you want, with a special issue or call for papers by Accounting in Europe. So I'm very happy in a way, but also have some mixed feelings because this will be my last symposium that I'll be organizing. This is my last year as editor. But the good news is that Araceli will be taking over the journal for the next 4 years, so it will be in very good hands. This came out a bit of some discussions and ideas from the FRSC, the Financial Reporting Standards Committee, and the idea of trying to sort of get a picture of where we are, if you want, with respect to IFRS, but at the level, if you want, of national GAAP, national law. And the EU directive sort of gave sort of an interesting point in time to look through that process, where are we? So I had the lovely job of trying to manage, let me see if I can get this working.
I think that's the forward, is that one?
Ah, okay, forward, all right. So the special issue, as Araceli has just mentioned, has just come online, if you want. So if you go to the website of Accounting in Europe, you'll find exactly these 25 papers. So we've had the pleasure of trying to cover almost all of Europe. And basically the authors tried to answer a certain number of questions. Questions like, are there references to IFRS or IFRS for SMEs in national GAAP? Are there references to these standards by enforcement bodies? Well, what are potentially stakeholders' positions on these things? And try to sort of map, in some sense, maybe some of the major differences between IFRS and national GAAP. So without going through the very long list, you will be able to at least see that, yes, we have studies on Austria and Germany, on Belgium, on Croatia, Cyprus, the Czech Republic, Denmark, Estonia, Finland, France, Greece, Ireland, Italy, with Malta, the Netherlands, Norway, Poland, Portugal, Romania, Slovenia, Spain, Sweden, Switzerland, and Turkey and the United Kingdom. So we've got a very, very, I think, broad coverage. There's obviously maybe a few countries missing. So I invite you to sort of go and look at these papers if you want a little bit more detail on these, what's going on at, like I say, the national level in each of these countries. What I've decided to do is, well, trying to summarize a little bit, or trying to get a picture a little bit of where we are, and from the reading of these papers and from some other material, I sort of try to do sort of some classification, and now I realize sort of the challenges of when we're trying to classify countries and trying to find some schemes, but I decided to look at a certain number of things. So the first thing that I did is try to see, are IFRS permitted or allowed, or with respect to consolidated accounts. Now obviously we've tried to limit the scope, because it does get a bit complicated sometimes, the financial firms, non-financial firms. So the focus has mostly been, if you want, on non-financial undertakings that are trading for gain. So I tried to sort of get a picture or update, because we did have a picture by ARC 3-4 years ago of what's the use of IFRS in consolidated accounts of these non-listed firms? What's the status of IFRS in the annual separate accounts of these, if you want, undertakings? Then it's one thing to see if a country allows or permits, etc. I sort of had the next question, how many firms did actually use these options? And then I was curious to see sort of the extent of firms, unlisted firms, if you want, using IFRS at different levels. Now that's always a challenge. So we have one source. I went to Orbis and tried to figure out a little bit so that the extent of use, give us a little bit of a picture, and the last thing I did is try to potentially sort of create a classification scheme. So on a first level, if we try to sort of see with respect to consolidated accounts, I've created a certain number of categories, if you want, where is it required by all? Is it required by some, but permitted for others? Is it required for some, permitted for some? Permitted for all, or permitted for some firms? So without given time constraints, I'm not going to sort of go into all of the detail and list all of the countries, but I mean, the overall conclusion is that it is relatively sort of permitted out there, if you want, for consolidated, at the consolidated level, to use IFRS for non-listed firms, with, like I say, a few exceptions, or some places where we seem to maybe limit a little bit to larger groups, or if you want to potentially also require that the firms are thinking of going and being listed, and in some countries, Greece, Finland, that they be audited. But overall, we have a picture where it's relatively sort of possible to use IFRS, I think, for a large number of firms at the consolidated level. So that was the first sort of picture that I think a lot of people already knew. The picture is quite different when we move on to the level of annual or separate accounts. And there's one extreme, Cyprus, that still has the possibility to require this by all firms. Malta, that sort of requires it mostly for larger companies. A certain number, Croatia and Greece, where it's required by some firms. In Croatia, large entrepreneurs, or in Greece, significant subsidiaries of listed groups. But it's more limited. Permitted for all is a smaller set of countries: Denmark, Estonia, Ireland, Italy, Netherlands, Norway, Slovenia, the UK, and Turkey. permitted for some, often subsidiaries, like for the Czech Republic, independent audited statements in the case of Finland, subs again for Portugal, and in Switzerland if you have no subsidiaries, and if you are in Poland you need to be sort of in the process of filing for admission to trading. But then there's a large set of countries where it is not permitted at all. So Austria, Belgium, France, Germany, Romania, Spain and Sweden. And I tried to connect this. A number of years back, Christopher Noakes tried to sort of look at where we were at some, with respect to some of these questions. And he had this two sort of tier categorization of Europe. And one set of sort of European countries were said to be, strong equity, commercial-driven type sort of countries, accounting type systems, and then we had the class B of more sort of, the opposite, where more specific for taxes, for legal reasons, and if you want, less equity-driven type sort of systems. So we can see that, yes, a number of these types of countries are those that permit, if you want, mostly permit the use of IFRS in the context of non-listed separate accounts. So this is what we could potentially, the options firms have. What are they doing? Now, I'm sorry, because it won't be very easy to see. It's hard to figure out how to plug all of that in, but I sort of asked in the Orbis database, okay, so if we look at C1, C2 is what they categorize as consolidated accounts, either with no unconsolidated or separate accounts, or C2 consolidated and with, you have also, if you want, some unconsolidated separate accounts, and U1 is unconsolidated accounts. And LF is limited information, so I've sort of dropped. So it comes to the issue that we often point out. These are a large set of firms. We're talking almost around 400,000 firms that would meet the definition of medium or large based on Orbis. And we've had these debates in other settings during the conference. The cutoffs can vary a lot in different places. So this would probably, under the new EU directive, cover mostly, if you want, what they call large at Bureau van Dijk is close to what we would call medium and large under the new EU sort of directive. If we just take the numbers for granted, and that's where we learn also the challenges and the difficulties with databases, it would seem to say that 12% of these firms are using IFRS. And then I said, well, that's sort of much higher than I expected. And then we find the two culprits, and we find that, in fact, there's two things that don't make any sense in here. It's Spain and Portugal. If you look at the numbers, it's sort of saying that 90% plus of firms in Spain and Portugal are using IFRS. When I talked to colleagues from these countries, they said that can't be. And it's not even possible in most settings. So, yes, I had a lovely chat with the people at Bureau van Dijk to realize that for the last number of years they've been coding basically the notion that if firms are following the law, they interpreted that as being IFRS, which we know isn't. So they're supposed to fix the data set. If we look elsewhere, we see that, in fact, even though it's permitted, it is not that widely sort of used by these firms. The UK, and I've got other work looking at these UK, is probably the largest set of firms. So there is 6,000 sort of firms that would be using IFRS. But again, I'm not sure that Bureau van Dijk has fully digested the change in 2013-14 when the UK changed and basically now has a three-tier system. So is it IFRS or FRS 102, which is closer to IFRS for SMEs? So it's very muddy, but at least it gives us a slight picture, but it also tells us how complicated it can be. It's allowed, like I say, in a number of countries at the consolidated level, but when you look at this, there's very, very limited sort of views. Well, Cyprus, because they have to, but beyond that, In Greece, I've been told, sort of mostly shipping type firms that have chosen to adopt the IFRS, but in other countries, beyond the UK, if you want, in Ireland, where there's maybe something between 5 to 10% of firms that have nevertheless voluntarily decided to adopt IFRS. And if there's one call for researchers is maybe to better understand a little bit, you know, these firms and why they did it. And there's a certain number of papers out there that are cited in my review paper. So in the end, what did I try to do is maybe come down with, you know, a different type of classification. I think the two-system classification that we sometimes have been used to is probably not adequate to sort of describe where we are at the moment. There's a lot of changes going on in different countries, on different paths, and in a sense, I've tried to create, in some sense, these four categories, and like any classification scheme, you could probably argue with me for a number of these, but I still think that, no, okay, Cyprus is always the exception, but when we look at overall, there's a certain number of countries which we could probably categorize as being generally aligned with IFRS, where they do reference IFRS. IFRSs are acknowledged. If the national gap doesn't cover certain types of issues, it is often suggested, permitted to go and see in IFRS for an answer. So these are a set of countries like Croatia, Denmark, Finland, Greece, Malta, Poland, Portugal, and Slovenia, which, as you can see, would not fit into this classical sort of category of Class A sort of accounting systems that were more equity, commercially driven. So things are changing, evolving, if you want, in these different countries. And like I say, you have to go to these specific studies to get a little bit more detail. Greece, it's been sort of a process following the crisis of trying to do a lot of changes, if you want, in the business environment and try to change a bit regulations. Some countries are maybe in the process of debating, and then Denmark is at the moment thinking about maybe, well, should they move more to IFRS for SMEs, but that's not, you know, hasn't been decided yet. So that's one category. Then there's these countries where we could argue that they're generally aligned with IFRS for SMEs, even though that a number of them have kept sort of a local flavor. So it's not exactly IFRS for SMEs. It is in Estonia, but as we know, in Ireland and the UK, it's FRS 102, which is you know, slightly different. In Sweden, it's K3. It's used in Norway and in the Netherlands, at least there are possibilities. Then I've put sort of a in-between category where you would say that they're generally aligned, or they've been quite influenced by FRS, but they don't reference it at all. They would not mention it, and in some sense, to maintain, at least my understanding, to maintain complete sovereignty over accounting rules, they don't want to mention or sort of say that, in fact, that these are IFRS. But Romania, Spain, and at least the Swiss gap in Switzerland are pretty sort of aligned on IFRS. Now, again, here we could argue at some point in time we could have put France in this column, but in France things have evolved in somewhat sort of a different direction, where for a long time after 2005 we had a feeling that they were aligning with IFRS. After the crisis, the sort of view is now much more disconnected, and in some sense much less oriented to IFRS. So in that last category, I put the countries where there's some alignment, and it has had some influence, but in these countries, at least a certain set of financial statements, the separate accounts, are mostly focused for tax, investment, or if you want, other legal issues. So Austria, Belgium, the Czech Republic, France, Germany, Italy, and le Code des Obligations in Switzerland. So as I say, I'm sure we can have a lot of discussions and debates about this, so if you want to do so, I invite you to go and read the other 24 papers in the special issue and try to get, if you want, a bit more information on these countries. Thank you.
Okay, thank you, Paul. So, it seems that IFRS are not widely used, apart from in the consolidated accounts of the listed entities. So let's see what's the view of the ISB in this sense. So I will ask Anne, which is the technical director of the ISB, what are the perceived obstacles that the ISB see to use IFRS in this context? And is there anything that you can do to reduce these obstacles if you see they exist? So.
Thank you, Araceli, and thank you very much for inviting me to be part of this panel. So I just thought I'd sort of step back a bit and talk about where ISB standards are used and what the perceived obstacles there are to their use and what we're trying to do to encourage people to use them. So firstly, this is a very high-level overview, and you can tell from Paul's discussion that it covers a very wide range of different extents to which IFRS or the IFRS for SMEs are required or permitted or actually used in different countries. But I think we would at least say that it is clear that the IFRS and the IFRS for SMEs are used widely around the world. And from our point of view, that's a great success story. I mean, it's far more widely used than I think anybody would have expected when the ISB started. So we are generally pleased with the extent that our standards are used. And I think it's worth in this forum here to acknowledge that a lot of the success of IFRS, the extent to which they're used, is because of the EU adopting them for listed companies. It gave the use of IFRS a huge boost around the world. So why doesn't everybody use our standards, given they're such good things? And I think the first thing is the loss of sovereignty that Paul referred to. I mean, it is very difficult for jurisdictions to give up control of the standard setting process. I mean, how do they know that they can trust us to come up with standards that are going to be suitable for them? The next thing is we do have clearly set objectives in our conceptual framework and in a sort of section of the IFRS for SMEs on what we think our standards are aiming to do, the sort of information that we think should be provided in general purpose financial statements. And if you think that isn't what you want financial statements to do, you're not going to find our standards appropriate. And also, I think it's undeniable that suddenly a full set of IFRS are complicated, inevitably, because of the sorts of companies and the transactions that we do have to cover. So I think those are the main obstacles. I'll just... Sorry, technology. Difficult. So on the first one, as I said, it is hard for jurisdictions to give up control of the standard setting process. I mean, we at the ISB, we would argue that we have a very full and transparent due process, which means that we listen, we gather views from everybody, we listen to what people say, we report back, so we hope that people are confident that we have listened. But nonetheless, that's not the same. It's not the same being one voice amongst many giving a view to us as being in control of the process. On the other hand, there are clearly substantial benefits from using IFRS. They are recognized high-quality standards, which means that you get improved access to capital, improved comparability across the world in terms of financial information. And I suppose one thing that maybe we don't talk about very often is the reduced cost. Setting standards isn't easy. It's an expensive and a time-consuming process. If we're doing that, then individual jurisdictions don't need to do that. And it is a big commitment to set up a standard-setting body, and it's understandable that many jurisdictions would rather not incur that cost. The other thing about the loss of sovereignty is, of course, it can be mitigated by endorsement processes. Now, I don't, you know, we're always a bit sensitive about this. I'm not saying everybody should go and set up an endorsement process. That means they can really pick and choose which bits of our standards they want. I mean, we would lose a lot of the benefits across the world if everybody endorsed different bits. But we do understand that jurisdictions want to have and need to have some sort of endorsement, some sort of say over the final product that we put out. Is it right for them? Thinking about different objectives, the objective in our view of general purpose financial statements is to provide financial information that's useful for providers of capital. And that includes information that can be used to assess stewardship. But it is about making economic decisions about investing. That's how we set our standards. That's what we're trying to achieve. So it's not information. Our objective is not to produce information particularly for contracting purposes. So we're not setting standards that you can use without any adjustments for tax or distribution. That's not what we're trying to get to. We claim, and I think it's true to at least some extent, that there are often similar information needs for the different sorts of objectives you might have. And it may be that, you know, rather than produce a completely different set of accounts for tax purposes, you can use IFRS standards to produce information and then do some sort of reconciliation to get to a figure that's appropriate for tax or distributions. But those aren't our objectives, and if that is what a jurisdiction thinks the primary objective of a set of financial statements should be, then it would be understandable if they thought that our standards weren't the right sort of standards. Then on to complexity. We have to set standards that large multinational companies can use to account for the sorts of complex transactions that they enter into. That's, you know, our remit really. That means that some of the standards are going to be complicated. We also have a very difficult balance to draw between the level of detail that we get into and allowing the use of judgment within clearly specified principles. And how you draw that balance, the best place for that balance, I think is very difficult. You can see from our standards they're getting longer, which means they're harder to read. They're getting longer because we cover more and more types of different transactions, different scenarios in them. What do you do in this case? What do you do in that case? And maybe sometimes we go into too much detail. On the other hand, it's very difficult if someone asks us and says, we don't quite understand how you'd apply this standard to this situation. If we think we know the answer, it seems perverse to say, oh, well, we know the answer, but we're not going to tell you. I mean, that just seems unhelpful. But then the more we tell people what we think the answer is, the bigger the volume of authoritative literature, in some sense, develops, and the harder it gets. And I don't think there's an easy answer to this. It is just a very difficult balance to strike. So the things we do, I mean, we acknowledge that the full set of full IFRS is not going to be suitable for many smaller or non-publicly accountable entities, which is why we've developed the IFRS for SMEs. And that, we think, has the benefit of IFRS standards, sort of the high quality and the comparability, but with reduced complexity, and it is much, much shorter than the full set of IFRSs. We also have a guide for using the IFRS for SMEs for micro-sized entities. I have to be honest, I don't know what that guide says, but I mean, it shows that we are keen to try and make our work as accessible to as many types of entity as we can. That was my contribution, Araceli. Thank you.
Thank you very much. So now I have two types of questions for Saskia, the director of the FRAC. In fact, one of the topics of this symposium is the transposing the new accounting directive into local GAAP. So I have one question related with that for the FRAC, which is what has been the role of the FRAC in relation with the new accounting directive and the implementation of the accounting directive? Saskia?
Thank you, Araceli. And thank you both, Araceli and Paul, for inviting FRAC to this symposium, certainly on a topic that's actually outside the scope of our activities at present. So, but we try to give some views on it. So when I saw the title, Transposition of the New Accounting Directive, I had to think, what is the relation with FRAC? So in the past, and I'm looking there at my colleague Rasmus, who did this very detailed study on comparing the directive with the IFRS for SMEs, and we concluded on a number of differences. So that was, I think, a very important contribution that we made at the time in the establishment as well of the new directive, and that we did actually at the request of the Commission. For this new directive of 2013, we have been providing a sort of sounding board with help of our SME working group. The Commission came to us to see, and then on difficult items they asked our members, what did you think about that? And it was all informal, but it was, I think, a useful exchange of views. And the other thing we did, we have a consultative forum of standard setters, where all of standard setters of Europe come together, and they are basically responsible in the end for the transposition of the directive. And there we had a couple of discussions amongst them. So there we had a facilitating role, not a role in making or influencing the directive. What you probably know is that we had this big reform, this Maestad reform in 2014. And in that reform, basically, one of the recommendations of Mr. Maestad was to restrict our activities to the IS regulation. And that comes actually then close to Paul's presentation. So everything within the IS regulations, including the options. But that means that whatever it did also in the past, looking at private organizations in general, did quite a lot of work on IFRS for SMEs, that we no longer can do that for the moment. So we have taken a bit of distance, we are monitoring. That doesn't mean that, that SMEs are not important for us anymore, are not involved in the process anymore. So we still have the option in the IS regulation, so the companies that can apply on a voluntary basis IFRS, and the small listed companies as well. So that's where it comes in our work. If we look at transposition, Araceli, of course, and I think that is what Anne actually addressed. When you transpose the directive, you see, of course, that a lot of areas are not covered by the directive, and then IFRS comes in that relation. And obviously, the national standard setters are involved in us, and they then have to look how to do that. They have to look at proportionality, complexity, what you're mentioning, what kind of detailed, how close do they want to stay to IFRS. They may have companies that want to be listed in the future, others decide to step away of it. How long will they wait? You know, new IFRSs, you have interpretations, other things, so do you do it immediately, do you wait? So there is a lot of issues coming in there. And they also have to do their own impact assessment, and because FRAC is doing impact assessments, it's new, we can come back to that a bit later perhaps, but to see the national impact, you have to do national assessments.
Going back to the small entities, you are talking about the small and medium-sized entities, but for example, what do these entities play, the role they play in your work in general and in the endorsement advice of the FRAC? And if you have any illustration that these entities, the small and medium-sized entities, play really a role when you consider the endorsement advice to the ISB, sorry, the endorsement advice to the Commission, not to the ISB.
Yeah, so one of EFRA's tasks is the endorsement advice. Actually, when we explain our mission statement, we said our main mission is to influence the ISB from a European perspective so that the resulting standards are fit for Europe and can be used in Europe. And that actually is a means to make the second step, the endorsement advice, a more smooth process. As part of this MyStart review, the endorsement process has been enhanced, and EFRAC has received an additional task, which is the assessment of the European public good. And as part of that, we have to do impact analysis. And on IFRS 16, we did a first full-fledged impact analysis, and now I'm going to make a bit advertising for our symposium that is coming after the lunch in this same meeting room, where we go into the experiences of that impact analysis. In order to do the endorsement advice, we received basically from the Commission the request to do the endorsement, and that specifies actually what we have to do. We have the endorsement criteria, we have this European public good criteria. But for the impact analysis, there are two appendixes in this request. The first one is a general one, and there we are asked to look at the impact on all stakeholders, and it says including SMEs where relevant. So we will have to look at it. And then in the specific, what we call the so-called Appendix 2, there are specific items where we have to look at. So, and that, for instance, in IFRS 16, we sometimes have to look at SMEs. But we have to keep in mind that our role is to look at the consolidated accounts of listed entities. So it's not directly aimed at SMEs. And we get sometimes, indeed, the request, what's the impact on national gaps? Should EFRAC look at that? And we have discussions had at our board whether or not we should look at that, and also with the Commission. But they are very clear. It's a member state option to apply IFRS to, and they can decide to do that or not to do that, so they can avoid when they want it. On national gap, it's a national sovereignty decision to do so. So it's not for us to assess what that impact would be. And also, it's in a way, if you think, how could you do that? You should have to know which part of the IFRS will be taken. If we have the example of IFRS 16, what would they take exactly? And every country might do that differently. So how could we know what they are doing, and then how could we assess what the impact would be? So we are stepping away from that. But we mentioned it. We mentioned the issue in our endorsement advice, and Richard is going to discuss the famous trickling down, and I think that term even arrived in our endorsement advice because of that. SMEs are important, and I brought this, so we basically had to look in IFRS 16. We were asked to do two things. We had to see if SMEs that were using IFRS, if it was proportionate for them, so if it was not too detailed and so on. And there actually, when I saw these figures of Paul, I was really amazed. So I said, oh my God, what is this? This is 100% different from what we have in our endorsement advice. Because we had severe difficulties in finding out which SMEs use IFRS. Actually, if you go to the, we did all kinds of things to find out. Companies have to file accounts. It's a different system in different countries, so it's Chamber of Commerce or whatever. But nobody is looking at what accounting policies are used. So you actually, to find out, you would have to go to each financial statement and to see what policies are used, whether they use IFRS, whether they use IFRS for SMEs or national GAAP. So we impossibly could do that. So we asked our standard setters, and I think there was only one or two that actually could say, because they have a system, but all the others had just to estimate. And the estimate that less than 1%, and in most cases less than 0.1% was using IFRS. So that was a bit different from what you showed. So these are estimates as well, but we came to the conclusion basically that the take-up of IFRS by non-listed companies, by SMEs, is relatively small.
Yeah. So the problem could be that some local GAAP, they are based in IFRS, so that's the influence goes through this way maybe, so that's a problem. So thank you very much, Saskia. Now, after Saskia's comment, we are going to ask to the practitioners. So first of all, we have, Richard is going to present a very brief summary of a survey that they conducted in some European countries, where preparers were asked about the application of IFRS criteria for small and medium-sized entities. So whenever you want, Richard.
Okay, thank you very much. And I do feel I'm going to be talking about a study that EFAA, the European Federation of Accountants and Auditors for SMEs, did in a limited number of member states. I don't get anywhere near your 25, so I'll be interested to look at your results, Paul. But in fact, we've done 2 surveys because the title of this is about the transposition of the accounting directive and the impact of IFRS. And in fact, we've done 2 studies. One we published last year, and one we've published this year. The one we did last year was on the transposition of the accounting directives, and we looked at a limited number of member states, 8 member states, in fact, but some of the bigger ones, and we looked at how the different options and so on that were in the accounting directive had actually been taken up. And I think our conclusion was rather perhaps a bit negative, that there was a lot of difference between them. We know the accounting directive does include a lot of options, both in terms of the scope of application, the size thresholds. There's quite a bit of scope for variation there, as well as then when you start to look at the measurement issues, how recognition and measurement take place within that directive. And a lot of options there and a lot of variation, of course. That's why the options are there. So I think our overall conclusion was that the main effect of the new accounting directive was in 2 areas. One was the much wider creation of the micro level regime, which many member states only brought in with the new accounting directive, and also the maximum harmonization of disclosures by small companies. So the impact on medium and large companies was very little change there. Very little change in the way the member states took up their different recognition and measurement options. So that was our conclusion on that study on the accounting directives. Then, in a way, inspired by that, and I think by the impending arrival of IFRS 16, we thought, well, just how different, just what is the impact of IFRS on SME accounting, given that picture from the directive implementation, and we looked on this one. I think what we were trying to do here was, I think a lot of people would say, yes, IFRS does have an impact on a national GAAP. That's basically what we're looking at. How much impact is there? Not how many companies directly apply IFRS or IFRS for SMEs, which was partly what your one was, Paul, and indeed FREG's efforts on IFRS 16. But just looking at national GAAP, how similar is national GAAP to IFRS? And I think we wanted evidence, and to some extent, if we were able to measure it, all well and good, and that's why we looked at this study. We just looked here at 5 countries, but I think they represent a bit of a range: Germany, the Netherlands, Portugal, Spain, and the UK. And with the directive, I think one of the things that became clear to us is that in some countries, the difference between micro, small and medium are starting to get quite significant. There is divergence in some countries between how micro entities are required or allowed to account for things and how medium-sized are, and we'll look at that. So we decided we needed to look at those 3 categories separately, and then we took 100, or nearly 100 accounting measures out of full IFRS and said, well, how many of those, if you look at these high-level things like our stocks, our inventory to be accounted for at the lower of cost and net realizable value, our financial instruments held for trading required to be stated at fair value. Those sort of high-level accounting treatments is what we looked at, but we looked at 100 of those, and those just concern recognition and measurement, because we know that disclosure requirements for small, micro particularly, are entirely different from those of IFRS, or indeed for medium-sized. So it's just about recognition and measurement. I think what we did was to categorize things into three categories, which is, I suppose, what we called the red, which is where the accounting treatment is different from IFRS, full IFRS, and then we looked at where it's similar. We had two categories. One, which was, could we say that it appeared to have been the accounting treatment for small SMEs, is that triggered by an IFRS, or was it a pre-existing treatment that exists? So my example of stocks inventory at lower of cost and net realizable value was obviously in many countries a pre-existing treatment before IFRS came along in 2005. So just those three categories. And what did we find? We found that there was trickle down. There was the green category we had appeared in all countries, and that was particularly evident in Spain and Portugal for the medium-sized entities. Convergence with IFRS, so if you added the green and the white together, what did we find there? Well, we found a range which was perhaps not as big a range as I perhaps expected. So Germany and the Netherlands were 57% over those three categories was convergent with IFRS, and the UK was 72%. And if you look at then the different size categories, medium, small, and micro, what we found was that the medium is much more convergent with IFRS. So over those 5 countries, 72% of the treatment for medium-sized companies is IFRS convergent, and only 57% for micros, and small comes somewhere in between the two. But for Portugal, for example, which might shed a bit of light on some of your findings, Paul, on our recognition and measurement, Portugal medium-sized entities scored nearly 90%. Recognition and measurement convergence. But as I pointed out, we did have the other thing I think was clear was divergence growing between the two, between those different size categories in Europe. And I think you were just looking at large, weren't you, for your ones, whereas we were looking below that. I think the other things I would say is that just looking at the sort of story of those 5 countries, trickle down has come at different speeds. So certainly the UK was regularly updating its small accounting requirements in line with changes for larger companies, but also in other. And more recently, I think what we see is sort of step changes. So major revision to the German commercial code happened, I think, in about 2009, which was designed to get that much closer to IFRS. UK has had a major change with the implementation of FRS 102. If we looked particularly at the medium size, certain IFRS have tended not to result in a trickle down. So we can see IAS 41 on agriculture, not particularly popular. IAS 39 with its rigid classification system, not very popular, and IFRS 10, not much take up there. And then my third one, I've said, oh, I see, I've used the word correlation. Yeah, okay, I think in this audience I shouldn't have used the word correlation. I think I should have just used the word a sort of impression that we've picked up, which was that items not dealt with in the EU accounting directives like leasing, revenue and deferred tax were in fact items where there was quite a lot of take-up of these high-level recognition and measurement issues. So I think we have a picture where quite clearly IFRS has, in our view, that this study shows, IFRS does actually have a significant impact on SME accounting, so that we think there are messages for the ISB and indeed and possibly for EFRAG as well, that if you make changes to your main standards, particularly on key recognition and measurement issues, there is going to be a lot of tendency for that to be applied by national standard setters in national GAAP to the vast bulk of companies in Europe, which are the SMEs. So I think we would hope that that the ISB does, and I think EFRAG in its endorsement does pay a bit more attention to these. The inevitable, as we would see it, the inevitable impact on SMEs of the changes they've done. Thank you.
Thank you. Richard, so is any additional implications you see of this result?
I think those. I think the implications. I think we would see particularly for the ISB, and I think for EFRAG, and obviously the development of IFRS 16, I said, was a sort of trigger for us to start thinking about this issue when we saw it coming down the line, because here is a radical change in treatment of recognition and measurement item. Will this come to be applied to SMEs? I think what we would say is the history tends to say yes, it will, because I think there are pressures on national standard setters not to end up with very different treatments for the listed companies using IFRS and all other companies in their jurisdictions. I think to have very different treatments is quite difficult. I think the only other thing I would say is I think we need to look a bit more at the red category, why those treatments, the items which didn't trickle down, why that took place. And I think we'll find fair value has quite an impact there, perhaps tax treatments may do as well.
Okay, thank you very much. Now I would like to ask Salvador from his experience, well, two different things. First of all, I know you give input to this study from the Spanish side. So I would like to know, from the point of view of the Spanish professionals and stakeholders, which is the implication of this study. That's on one side. And from your perspective, as your experience in terms of the institution you chair, which is giving finance to these small and medium-sized entities to invest abroad, so you analyze if they are viable to give them some finance, so you need to know the accounts. You have to analyze their account. So from this perspective, do you think that the internalization of these entities, the smaller entities, become easier if there is accounting harmonization among these type of entities? That's one question. And then, should the smaller entities use the same set of accounts that the larger entities, if the answer to the previous question is yes? Thank you.
Sorry.
Okay, thank you. Thank you very much. Good morning. First of all, I would like to thank the European Accounting Association and the European Federation of Accounting and Auditors for this invitation. Of course, our excellent moderator and coordinator, thank you very much for your help to prepare this meeting. And thank you so much all assistants at this meeting and our colleagues in this panel. Okay. In relationship to the first question, I prepared my presentation from another point of view, a mix between professional academics and business. In relation to the first question, personally, even professionally, I see more pros than cons. I explain. I'll explain one moment. Trickling down anonymization, in my point of view, is a very good thing. Reduce complexity, better understanding by readers of accounts, comparability between entities, and comparability basis for the preparation of accounts within groups, and efficiency in the training of account. The last 2 points are very important for the next question. Okay. In this sense, you know very well the accounting standard in Spain. About this was explained Mr. Paul before to me, and you know very well, and this colleague you know very well too. In this slide you can see that, for example, listed companies use IFRS directly according to European regulations, and non-listed companies can choose to comply with IFRS or with the Spain accounting principles. Individual annual accounts do not depend on whether companies are listed or not listed. They have to follow Spanish accounting principles. We have been amended to comply with EU. Following this, the previous article that Mr. Paul and the survey from the European Federation of Accounting Association, trickling down that's harmonization. If you read this article and you read this survey, you can see that the Spanish, in our opinion, the Spanish analysis indicates a significant tracking down from IFRS to the accounting treatment adopted by Spanish entities. More or less, 51% of the IR chains noted in the survey were ultimately taken into the Spanish GAAP. Only 1/3 of the IR chain have not found their way into the Spanish GAAP. Well, I don't know if it is enough or not, but this is the result. In summary, you know very well, in Spain, adopt IRS, yes. Full adoption, no. However, in our opinion, step by step, it is good. In some way, to be inspired by them. If you study or analyze the different positions of the different stakeholders, you can find evidence or support to this conclusion. We did it through one survey to the Spanish economists, accounting economists, who work in accounting and belong to Consejo General de Economistas de España. There are currently more or less 2,000 professionals. Well, in this moment, perhaps it's 2,100 members. We asked not one, but 3 times in 2008, 2009, and 2012. Well, now we have another one. We did other survey in 2015. And in 2008, the first year of the application of the new PGC in Spain, the more important chain in Spain recently, and 2009 and 2012. For the objective on today, only I am showing 2 or 3 questions. when asked about whether this simplification for small and medium enterprises is necessary, the professionals agree that it is more or less between 60%, 70%. In 2015, 2015 is 75%. Is yes, they want to continue working in that way. No. They also like, for me or for us, this is the principal result. They also like the way of doing this chain, which entailment in Spanish gas instead of adopting IFRS directly. Well, if you see this slide, you can say, oh, 60%, 70% is no. Yes, it's true. But on the other hand, 40% or between 30% and 40% is yes. Well, 40% is yes, is, in our opinion, is enough. On the other hand, 80% or 90% of economists, they say that you know very, very well the IFRS. Yes, for that reason, they know very well the IFRS, but on the other hand, they prefer this model. Okay? Well, if you read the other, you see the other slide, they don't have problem for adopt this reform in Spain. They have time and they know very well. In summary, perhaps accounting profession is essential for economic welfare and for small and medium enterprises. To improve our economic performance, we need to think seriously about alternative approach, such as a regulatory competition in financial reporting and in accounting profession, like today. For that reason, the answer to your question is, for us, harmonization is good. Step by step, perhaps in the future, we'll reach the objective. If you compare with 20 years ago, if you compare now, the difference is very, very, very big. In relation to the second question, the first question that you asked to me, for example, does the internationalization become easier if we have more accounting harmonization? The answer is yes, in capital letters. In my experience, this is very, very important, this harmonization. It's essential. For example, Cofides, a company, and other financial institutions use the financial statement as a key management tool to take decisions as a financier. If you don't have harmonization, you have the first problem for obtaining our capital, our financing. You have the first problem. For that reason, harmonization is necessary. In my opinion, if harmonization isn't by law, it's important. Yes, it's important, but in general, harmonization is true in a business. It's true. Now you can see this sentence. For example, in Cofides, the financial information requested to small and medium enterprises, we need audited financial statement for investment promoter. We need audited financial statement for guarantor, if different from promoter. And we need audited financial statement. Is very, very common if you have another local partners. Imagine that you don't have harmonization in this financial information. Yes, if you don't have this this harmonization, you have the first problem for obtaining this financing of COFIDES or other financial institutions. But on the other hand, for example, we need to calculate different financial ratios for small and medium enterprises, working capital, financial leverage, long-term financial leverage, debt coverage, etc. All financial ratios need harmonization too to show the board of directors, for example, very, very high quality information. On the other hand, we need to, COFIDES and other financial institutions, use non-financial information requested, non-financial information that small and medium enterprises. For example, I have different information what we need, summary of the project report, human resource requirement, compliance with any money lending rules, project evidence on environmental and social impact, etc., etc., etc. Perhaps it is strange in this meeting, but we need harmonization in this side too. We need harmonization in financial information and non-financial information. For example, to answer the second question, we have very well information our project. No, we had a favorable opinion, but we have reservation too in this opinion. 72% report without reservation, 28% report with reservation. In this case, 42% for to small and medium enterprises, and more or less 60% not small and medium enterprises. Well, if you check this reservation, you can see that only 15% this reservation is for not good harmonization. Only 15%. Well, it is good. If you have very good harmonization, you can do very, very well business around the world. Now, the world is without borders, at least in the business, no? In other fields, I don't have an opinion. Internationalization become easier. Is very nice. It's necessary for harmonization. If you have harmonization, it's very, very easy that you pass the first step for provide financing or to reach another business around the world. And I think, in my experience, that it's necessary to the convergence between large business and small and medium enterprises. Thank you very much.
Okay, thank you, Salvador. So thank you to all the members of the panel. Now I think we have 20 minutes left. So anybody from the audience or the members and the members of the panel can make any comment, question, whatever they want. So starting with the audience, if anybody wants to say anything, ask for the microphone, please. And anybody? Also from the members of the panel, of course. If you have any comment to the other members' presentations, and anybody? You, Paul?
Maybe I'll just show a provocative sort of statement and then see what the other panel members think about it. when we have choices of accounting systems, and we have some experiences, we can see, for example, in Switzerland, where firms can choose different systems and they can move. They've moved from IFRS to Swiss GAAP, etc. Now, I know a certain number of firms that might be interested in IFRS for SMEs, and these might be actually listed firms, in smaller firms or in unregulated markets. Why not just allow, in some sense, these firms to choose between the two sets of standards if we think they're both high-quality sets of standards, and see, in some sense, the firms expressing, in some sense, truly their need for what type and level of complexity they want.
We do say somewhere, I think it's at the beginning of the IFRS for SMEs, that we don't think it's appropriate for all entities, and in particular we don't think it's appropriate for publicly accountable entities and listed companies, because that's what we think the full set of IFRS is for. So we would not wish to see listed companies being able to use the IFRS for SMEs. Because the things that we put into the full set we think are important. I mean, we don't just put stuff in our standards for no reason. We think it's there. All the stuff that is there for a reason. And I agree that there's this difficult question about the balance between the level of detail and principles and judgment and complexity and all that. But, you know, we make that judgment as standard setters every time we put out a standard, and that's where we've come down. And so we think the IFRS for SMEs would not be an appropriate standard for listed and publicly accountable entities to use.
I was going to say this issue has, of course, come up with the European Commission's Capital Markets Union, initiative for which is I mean, which is really, in this respect, obviously it has a number of different sort of aspects and avenues of activity, but one of them is about the SMEs that they call them SMEs that are listed on alternative exchanges, and I guess that's one category you might be thinking of, and there currently. There tends to be in different member states. Sometimes these companies are just using national GAAP. Sometimes they're required to use IFRS. And of course, one of the debates is should there be something based on IFRS for SMEs? And I think the Commission were having some conversations with the ISB about this, but it sounds from Anne's answer like they probably aren't going to get much help from the ISB in that area. So this issue has definitely come up, and it's an important one.
Okay, thanks. Any other question? Yes, just there and there. Just first this one and then the second. There's somebody here. It's Gunther, but with this light we don't see anything. So, Gunther.
Günter Gebhardt from Frankfurt, and I'm a tech member. And you said that IFRS should be, or for SME, should not be used for listed firms. First of all, I would say this is not a mandate that the ISB can tell. That's in the realm of the legislators. And I would think there's a good reason to think about this, because there are stock exchanges where we have small companies, in particular I think in Switzerland also, and one major problem of full IFRS is that it's, so to speak, a dynamic system, constantly changing. I know that this is a body that has to produce output, and by that it should definitely regularly put something out to prove its existence. But this, in the end, means also that the accounting rules are constantly changing, and for smaller companies, even if they are listed, this is an enormous task to follow this. And a more steady set of accounting regulation would be helpful and would be useful. The ISB promised it, but it doesn't look like, if I look at the work plans the ISB has and to follow up EFRAG has. So this is, I think, an important challenge if we talk about smaller companies. And in a way, the step from a smaller company to a listed company, it's a burden. And interestingly, we see that a number of companies is going dark. Smaller listed companies opt out of IFRS.
I completely accept that it's up to regulators in different jurisdictions what they require. We can't impose IFRS or IFRS SMEs on anybody, but we do say in the IFRS for SMEs that it is developed in the ISB's view not for use by listed companies and publicly accountable companies. In terms of the rate of change, we don't put out standards just because we want to demonstrate we still exist. We put out standards because they are the product of people ask us about problems, and that goes through our due process, and we assess whether there is a problem, whether it's something that's suitable for standard setting activity, and ultimately you get some sort of output, whether it's an interpretation or a standard or an amendment, or maybe none of those. I mean, sometimes we do decide not to do anything. So we're not there just to create standards for the sake of them. They're there to solve problems that people ask us about. We do restrict the revision of the IFRS for SMEs so that it's not every time a new standard is issued, we don't automatically update the IFRS for SMEs. We wait and we bundle things together, and there was a revision in 2015. But I think financial reporting standards have to evolve over time, or as new transactions and new problems come up, we have to react.
Richard, yeah.
Yeah, I mean, I would absolutely agree, and I think I would rather take issue with what Gunther has said. Certainly, if you looked at the whole 3,000 pages, there are changes from time to time, and you might say those are, you might describe it as a sort of annual process of change. But I think if you looked at any one individual company, the effect of those changes is likely to be pretty small. And the other thing is that I think you can see how a lot of people would say how slow the ISB has been to implement changes that are quite clearly needed. So we have a lot of systems of emissions trading and so on, which has been an issue sitting there for the ISB to deal with in their, I think you've got, pollutant pricing mechanism now. We've been waiting for that, for something on that issue for years. Insurance. Yeah, so I take issue that we have such a rate. Of course, we have just had a number of very important and widespread impact standards issued on financial instruments. revenue recognition and leasing are clearly in those. Yeah, well, anyway, I would take a bit of an issue with that picture.
Sorry, there was another question, yeah.
Hello? Okay, sorry. Yes, I'm Richard Baker from the United States. In any case, in any system of laws, you have two components. You have the lawgiver and you have the enforcer. So the elephant in the room here is the lack of enforcement. In 150 jurisdictions, there's probably a lot of lack of enforcement. And I think that maybe goes back to the commentary from Germany where there is a, what did you say, shadow or something like that, where people are opting out. I mean, just take two examples of speed limits and use of cannabis, which are widely ignored throughout the world, and yet we have laws in every country with respect to these particular issues.
Who wants to answer?
Well, I mean, I think I think in many countries in Europe, and we can see this, for anything above small-sized companies, there is the audit requirement here in the European Union, and that I think is the most significant enforcement mechanism that we have, and not that there is some sort of financial policeman there. So that I think that's a very significant factor which needs to be taken into account. Now, admittedly, most companies are small or micro, and so and certainly in our study of the implementation of the accounting directive, we have found quite significant variations in the audit, both the audit threshold, which might be, which was sort of at the maximum level in Germany, the UK and the Netherlands, but in other member states, France and Italy and Spain, the level was much lower, and so many more companies are audited, and I think the audit is a very important factor in trying to ensure compliance with the standards.
So any other comment or question from the audience? No? So, sorry, there is a question there at the end, sorry.
Thanks. Mark Clatt with the University of Bristol. I have a question for Anne about how this information is being used, given that these companies are not listed and that the information is designed for capital investment decisions, and that the information is not designed to be used for contracting or for tax. Do you find that sometimes difficult to reconcile? The fact that these are not listed on a public exchange indicates that that might not be the primary use for the information for the vast majority of these companies.
Well, I think we think that even if companies aren't listed, there'll still be people who are interested in investing in them, and they will need financial information. We do accept, or I should say, these are all my comments actually, I don't know whether the board would agree or not, but they do, the contracting purposes might be more important potentially, relatively, compared to listed companies. We do think a lot of the information, I know there's a big debate about the purpose of financial statements and whether the information that you produce for investment decisions is different or similar to the information you need for contracting. I think we would say that a lot of the time the information that you need is the same or similar, and that you could if a jurisdiction does want to focus on particular contracting purposes, it could use information produced, say, by the IFRS for SMEs as a starting point and then develop reconciliations of that information. I mean, as an international standard setter, we couldn't possibly try and set standards that had a primary objective of particular contracting in particular jurisdictions. It wouldn't be possible, where it is possible across jurisdictions to think about information needs of investors. I also completely accept that our understanding of, not just for non-listed companies, but for listed companies as well, our understanding of the mechanisms of how the information in financial statements is actually used by investors is, you know, is not as good as it could be. As you know from your research, we would welcome lots of research on how do people actually use information in financial statements. What do they do with it? Because that would help inform our decision making a lot.
Can I just also just clarify? I'm not sure if I understood what Richard said, but I think he pointed out that deferred taxation was an area that you observed was used, that you did observe in the data in this survey, and I thought that the ISB could take some reassurance from that in some sense. If you observe companies reporting deferred taxation, that's indicating this information is being used for things other than taxation, perhaps for outside decision making.
Yes, I mean, certainly the deferred tax, the general requirement for deferred tax to be recognised is in the different countries, in the various countries we looked at, is a requirement, and I don't know whether that helps with the. I mean, that is accounting. It's not about the deferred tax, particularly isn't about the sort of contracting relationship between the company and the tax authorities, but certainly it's widely regarded. And I think our, you know, just in terms of recognition and measurement, I mean, I would say that our study does support that IFRS is considered a reasonable basis in many of its aspects for non-listed companies. I think just picking up on the UK experience with it, we non-publicly accountable entities, which I think is the definition from the IFRS for SMEs, also includes banks and financial institutions, and I think, personally speaking, I think one of the mistakes that the UK made in using IFRS for SMEs in its context was that we included within the scope of IFRS 102 the unlisted financial institutions, and that has led to difficulties in applying standards to those entities, and I think we would have been better off just requiring full IFRS for those financial institutions. So I think you do have to be a bit careful, and obviously disclosures and making sure the accounting treatment is comparable between listed financial institutions and unlisted financial institutions, both of which are regulated, is raising difficulties in the UK.
Okay, thank you very much. Before closing this session, I would like to thank Paul for the organization. I would like to thank the panelists for coming here. And I strongly recommend to read the papers online in Accounting Europe about these 25 papers about this specific topic. I think it's very useful for policymakers, for users, and for academics if you want to know the institutional background of every country. So, having said that, thank you very much to the audience for coming here, and that's all. Thank you.